So let's take a look at the weekly chart. This is a weekly chart, and you can see I've got a lot of lines on here. So let's break them down. We always want to start with the big picture from a technical perspective before we go to a shorter term. There's 3 red lines in the middle of the chart. Those are all major resistance. It's going to be hard for the market to get above them. The lowest line is at about $72, and you can see we're basically there right now on that weekly chart. Up above that, the second red line is about $76, and the one at the very top is around $86 or $87. So write those numbers down. That's potential peaks that we will reach in the seasonal rally. Okay, now let's take a look. I've got in the upper right hand corner, I have a black horizontal line and a short green line. This looks like an ascending triangle formation, higher lows and a flat top. Now, we don't know yet because, of course, it hasn't broken out of the top, but a formation like this normally breaks up and carries higher. One of the ways that we can see if it's probably a legitimate ascending triangle is to look down at the red line I've put down above the volume down at the bottom. Normally, an ascending triangle, a legitimate ascending triangle, will have a declining volume as we go through the pattern. And as you see, we have a slightly declining volume down at the bottom. So I think this is a legitimate ascending triangle. If it is a legitimate ascending triangle, then when we break the high of that, which is at about 72, we should get the objective would be up around 84, which is very close to the 86 red line up at the top. So this chart is bullish. Now, I've got another diagonal green line, a long one. This is a trend line. I don't find trend lines to be very valuable. I put it on here because if the market starts to break down, it'll probably break down to that green line. But let's ignore it for a second. Then I come to another interesting line, which is the black line that is downward slanting, and I've put it above stochastics. So what this tells us, and it's not finished yet, if we break to new highs, I think it will be, we don't know yet, I think it will be weekly stochastic divergence. To me, this is one of my favorite techniques of all time, and it would call for a dramatic move down at least to probably $50 a barrel, okay? At least to the big green uptrend line, probably to $50, and maybe even down to $40 or $30 a barrel. So I'm watching that to see if we get a legitimate weekly stochastic divergence, okay? So right now, I would say this chart is generally bullish, that we would see a breakout above the highs we just made that'll cause us to go up to about $84, $85 per barrel. But there's the potential for a massive break to the downside. Now, can we combine those? Well, it's possible that we could see a sharp move up to 84, creating stochastic divergence, and then a big collapse down to 50 or 40 or whatever in the 4 or 5 weeks from now. That's a possible way that both scenarios could be true. We'll have to keep you up to date on that. Okay, that's the big picture. Now let's take a look at the short-term picture. You can see the ascending triangle here. We're very close to breaking out. I think that's the main thing we want to look at on here. Some of our other indicators like Conqueror have not turned bullish. Coflex has turned bullish. 6-day swing, we could get into that right now. So, we've got a few indicators kind of running a little bit bullish here on this market. And we just today broke out of the 55-day high, which just came down. Now, because the 55-day high is just under that major resistance, I wouldn't take that buy signal. I'd wait for it to break that horizontal green line.